To solve the problem number 2, we have to follow first the exhibit 2.6. There we have given different amount of taxable income and their related tax rate. And in this problem, we have to find out three different requirements. First requirement, we have to find out what should be the marginal tax rate, and the very next requirement, there we will compute the amount of tax bill, and the last requirement, there we'll see how to measure the average tax rate. So three requirements we have to find out. So firstly, the given exhibit 2.6, there we have data on minimum taxable income, which is 17,000, and related tax rate, which is minimum tax rate, it is 10%. And here in the first requirement, we will see that the marginal tax rate for married couple filing jointly, it should be 15% as a marginal tax rate, because the taxable income 20,000, which is basically given in the problem, and it lies between the amount of 17,000 to 69,000 bracket, and there 15% is the marginal tax rate. So this should be the first requirement. Very easily we will find out from the exhibit 2.6. You can see there. And next requirement, the amount of tax bill. If we want to find out total amount of tax bill, the formula should be minimum taxable income multiplying with the minimum tax rate. So this is given in the exhibit 2.6, as I have earlier mentioned, plus excess over taxable income multiplying with marginal tax rate. So to get excess over taxable income, we can use this formula. Here you can see that excess over taxable income equal given taxable income minus the minimum taxable income. So this should be used to get excess over taxable income. And for third requirement, average tax rate, we have to follow this formula where tax bill by taxable income into 100. So this should be the formula first we have to remember. Now for taxable income, here we have given basically three different amount of taxable income. One is 20,000, another is 40,000, and lastly it is 60,000 as taxable income. So first, for taxable income 20,000, the amount of total tax bill should be 17,000 into 10%, I mean minimum amount of taxable income multiplying with minimum tax rate, which is 10%. And here given amount of taxable income, which is 20,000, as we're just finding out tax bill 20,000, so 20,000 minus minimum taxable income 17,000 multiplying with marginal tax rate, which is 15%. So if we compute here, we will have 1,700 plus 3,000, 20,000 minus 17,000, it should be 3,000 into 15%. It means 1,700 plus 450. So finally it should be 2,150. So this amount should be tax bill, total tax bill for the taxable income 20,000. Now average tax rate when 20,000 is taxable income, we have here total amount of tax bill, which is 2,150. So we computed before, and 20,000 as the amount given as taxable income into 100. So if we divide, then we will have 0.1075. It means 10.75%. So this is the average tax rate when taxable income is 20,000. Now for 40,000, taxable income 40,000, tax bill should be same again, 17,000 into 10% plus 40,000 minus 17,000 into 15%. So here we have 1,700, and we have, if we subtract 40,000 minus 17,000, it should be 23,000 into 15%. So here 1,700 plus 3,450. So finally we will have 5,150 as tax bill, total tax bill. Now to get average tax rate, we just require input into the equation. Here tax bill, total tax bill is computed 5,150 by 40,000 as taxable income into 100. So it should be 0.1288, meaning that 12.88%. So this should be the average tax rate when taxable income is 40,000. So lastly, we will see what should be the tax bill and the average tax rate when taxable income is 60,000. Well, finally, when taxable income is 60,000, that time tax bill should be same again, 17,000 into 10%. I mean minimum taxable income multiplying with the minimum tax rate. Here it is 17,000 into 10% plus 60,000, which is given taxable income, minus minimum amount of taxable income, here 17,000, into marginal tax rate, which is 15%. And if we just compute 1700 plus 43,000 into marginal tax rate 15%, so here 1700 or 1700 plus 6450, and after summation it should be 8150. This amount should be the amount of tax bill. And finally, average tax rate for taxable income 60,000. Here you can see that amount of tax bill we have computed there by 60,000 as given taxable income into 100. So it is 0.1358, meaning that it is 13.58% as the average tax rate when tax bill is 8150 and amount of taxable income is 60,000. So in this way you can compute all of these requirements from the given data on the exhibit 2.6 or any other given data. So hopefully you have come to learn how to solve this problem, and this will be very helpful for your understanding to compute similar math in your exam or anywhere.